Welcome back, everyone. What we're about to discuss today could have a direct impact on your daily life, your financial independence, and your peace of mind, especially if you're a UK pensioner or someone planning for retirement. There's been a lot of noise, a lot of sensational headlines, and a fair amount of panic online about so-called new withdrawal limits coming this August. You may have seen the posts and the videos claiming that pensioners won't be able to take out their own money, that banks are quietly preparing to lock down access to cash, and that the government is pushing us all into a cashless society whether we like it or not. I'm here to tell you calmly, clearly, and based on facts that much of what you've been hearing is either exaggerated, misunderstood, or simply not true. But that doesn't mean there's nothing to pay attention to. Changes are happening, and they do matter. They affect not just pensioners, but anyone who regularly uses cash, or relies on bank branches and post offices to handle their day-to-day transactions. The difference between being caught off guard and being fully prepared comes down to knowing the real rules, the genuine risks, and the practical steps you can take right now to protect your access to your money. So, let's cut through the confusion together. By the time we're done here, you'll know the truth about the August 2025 banking updates, what's actually changing, what's just internal bank policy dressed up as new rules, and exactly what you can do to make sure you're never left standing at a cash machine, staring at a screen that says transaction declined when you know there's money in your account. First, the big headline claim: is there a brand new UK law coming into force this August that will limit pensioners' cash withdrawals? The simple, factual answer is no. There is no legislation, none, that specifically targets pensioners, or sets a nationwide limit on how much cash they can withdraw in a day. This particular myth has grown out of a mix-up between three separate developments that have all been happening in the same time frame. Number 1. The Financial Conduct Authority, the FCA, has updated its monitoring requirements for unusual transactions. This is part of ongoing anti-fraud measures and applies to all customers, regardless of their age. Number 2. Individual banks, acting on their own policies, have been making tweaks to their daily withdrawal limits and verification processes, in some cases lowering limits, or requiring more ID checks for large amounts of cash. Number 3. The ongoing consultation about the so-called digital pound has stirred up a lot of anxiety about the long-term future of cash. But that consultation is just that, a consultation. No law has been passed, no rollout date has been set, and the government's own statements have repeatedly said that cash will remain part of the payment system for the foreseeable future. So what is actually changing this August? The most notable update is in how banks are required to report and monitor larger cash transactions, especially withdrawals or deposits over £5,000. These rules are tied to anti-money laundering protocols and apply across the board. You could be 25 years old or 85 years old, it makes no difference. What you will notice, though, is that if you try to withdraw more than £500 a day, you may now be asked for extra identification, proof of what the money is for, or even to give the bank advance notice before you collect it. Most of the big banks, Barclays, HSBC, Lloyds, Santander, still keep their standard ATM limits in the £300, £500 range per day. That's been the case for years. The difference now is that for anything above that, you'll probably need to go into a branch or follow extra procedures. Smaller banks and some building societies, on the other hand, have been more aggressive about reducing daily limits. The post office, which many pensioners rely on, has kept its withdrawal services, but tightened up ID requirements, especially if you're taking out larger sums. Now here's something most pensioners don't realize. Under the Payment Services Regulations 2017, you have a legal right to access your money within reasonable limits. A bank can't just set an unreasonably low limit without a good reason related to fraud prevention, account security, or regulatory compliance. If your bank suddenly slashes your daily withdrawal limit below £300 without explaining why, and it's not because they suspect fraud on your account, you have every right to challenge that decision. The Financial Ombudsman Service has actually ruled in favor of customers in cases where banks imposed blanket low limits that interfered with day-to-day needs. You also have the right to ask for a temporary increase in your withdrawal limit if you need cash for a legitimate reason, such as paying a tradesperson, making a big purchase, or even covering a family emergency. Banks can't refuse such requests out of hand. They have to consider them reasonably, and only say no if there's a documented security risk. For most pensioners, these changes will have little or no effect on their weekly routine. If you usually take out £200, £300 for groceries, bills, and household expenses, you probably won't notice anything different. The real concern is for those who prefer to handle larger amounts of cash, or who live in rural areas where branches are closing and cash access is already limited. For those people, it's important to have a plan. Branch closures are actually a much bigger threat to cash access than withdrawal limits. Thankfully, there are some solutions emerging, like the Banking Hub initiative, shared banking spaces where customers from different banks can still carry out essential transactions. But these hubs are rolling out slowly, and coverage is patchy. Before we move on, let's bust some of the more persistent myths doing the rounds on social media. Myth 1: there's a government plan to get rid of cash entirely by stealth. False. Cash is still legal tender, there's no expiry date on your notes and coins, and the Bank of England has repeatedly confirmed that they will maintain the infrastructure to support cash for as long as people want to use it. Myth 2: pensioners will be forced to use digital payments from August. Also false. There is no mandate, no deadline, and the Digital Pound project is still in its consultation phase, with protections for vulnerable users built in. Myth 3: banks can shut down your account just because you use too much or too little cash. Not true. Account closures require clear violations of your agreement or regulatory requirements, not your age or spending habits. Now, it's worth saying that some of these enhanced monitoring measures do bring benefits. They've already stopped millions of pounds being stolen from pensioners through scams. Yes, the extra verification can be annoying, but it's also a line of defense that has saved many people from losing their savings. The downside is that the added bureaucracy can be a headache, especially for pensioners who have mobility challenges or who aren't comfortable with online banking. In some cases, legitimate transactions do get delayed while banks investigate, and the quality of support varies wildly between providers. Looking further ahead, we can expect even more sophisticated monitoring of transactions, but that does not mean cash will vanish. The introduction of any central bank digital currency, like the digital pound, is still years away, and current proposals are clear that it would exist alongside cash, not replace it. What will continue to evolve are the ways banks verify identity and flag suspicious transactions, and hopefully, over time, these processes will get faster and less intrusive. So, what should you do right now? Step 1. Contact your bank directly. Don't rely on hearsay, and confirm your daily withdrawal limit. Ask if there have been any changes recently. Step 2. If you know you'll need more than your daily limit, set up a process with your bank in advance. Many offer telephone or in-branch arrangements for large sums. Step 3. Consider having accounts with more than one bank. If one tightens its rules unexpectedly, you'll still have another source of cash. Step 4. If your bank imposes restrictions that you think are unreasonable, keep a record and take it to the Financial Ombudsman. They offer free dispute resolution, and their track record shows they'll back you if the bank's actions are unfair. To sum up, there is no new law in August 2025 that will suddenly stop pensioners withdrawing their cash. The real changes are in transaction monitoring and fraud prevention, and they apply to everyone. Your right to access your money is protected by law. The limits you may encounter are more about bank policy than government orders. And if you face unreasonable restrictions, you have the power to challenge them. Stay informed, stay prepared, and don't let social media panic drive your decisions. The best defense is accurate information, and that's exactly what I'll keep bringing you. So, if you found this breakdown useful, give it a like, share it with friends or family who might be worried, and hit subscribe so you don't miss the next update. Your money is yours, and knowing your rights is the first step to keeping it that way.